Wednesday, October 5th, 2016, Monaco 64, home of alternative economics and contrarian views. I like to talk about sterling today, or the British pound. Of course, I'm based in the UK, so that interests me and a lot of my viewers, even though the majority of my viewers are based in the US. I think it will be of great interest for them as well, what I'm about to talk about. Basically, the US economy and the UK economy are fairly similar. I know the US economy is the biggest economy, in the world, but the UK is not far behind in terms of ranking. I think the UK is about number 5. Maybe now it's dropped with the pound dropping so much, but it's still in the top 10. The UK economy is followed the same path as the US economy. The UK used to be an industrial powerhouse, and since World War II, that has, gone downhill. And the UK economy, the real productive sector of the UK economy has been hollowed out. And in the last 20, 15 years, we've become a consumer-driven economy based on consumer debt, government debt, and that has helped greatly the City of London, because that's what they peddle, debt. And they make the more debt, that they're able to create and sell, the more fees they get, the more money they make, and the more power they have to continue that system. And the same thing has happened in the US. I know the US was at the height probably of its economic power after World War II in the 50s and 60s. But since the 70s and the 80s, industrial base of the US has also collapsed. And the US has become a total, 2/3 of the US economy is based on consumption. And you watch the policymakers, Treasury secretaries, Fed officials, they seem to all be concerned about the credit markets, and the fact that Americans need to consume. We look at economists always look at the consumption data, retail sales, don't look at industrial production as much as we used to, because it's not as important. So both economies are based on this system that benefits Wall Street in the US, because they're in the same business as the City of London of selling debt, be it to governments, be it to corporations, be it to consumers. But in my opinion, 2008 was, the bell ringing, last call, like in a pub here, they ring the bell an hour or half an hour before, to warn people that they've only got a certain amount of time to buy their drinks. And I think that was what '08 was. And it's not over, the crisis of '08. So with that in mind, I'm bringing up a chart of the pound. We've been making 31-year lows the last few days in the pound. Today we touched a low of 126.85. The previous low just after Brexit was just under 128, so we're continuing lower here. And you can look, I'll just put the chart up now. This is from '09. The low in '09 after the '08 crisis was around 135. For the last few years, the pound has been steady between 150 and 170. That was the high in July 2014. And ever since then, it's been basically going lower. And why is that? Well, because our economy is so indebted, be it government debt, consumer debt, or corporate debt, and the growth of our economy is not sustaining that debt anymore. So what does the government and the central bank do? They devalue the currency to try to default on that debt. Basically, devaluation of the currency is a default, because it makes everything, makes the pound worth less, if and foreign currencies help, with trade. We get foreign currencies and it helps pay off the debt because that foreign currency becomes worth more. So yes, people talk about, oh, pound's going down because of Brexit, but no, it's just that it's a controlled collapse of the currency we've seen since 2014, in my opinion. And they're distracting people with everything else. Brexit, party politics, leadership contests for Labour, for UKIP, everything. So yes, this chart doesn't look good. You can see, the bigger line is like a head and shoulder formation, and it doesn't look good. And since the big collapse, big move there after Brexit, you can see that spike. We've consolidated in a triangle, and we've broken through that triangle already now. It's taken a few months. 120 I've had as a target. I've made videos about 120. And who knows, it could even go lower. So what does that have, the pound or sterling have to do with the US? Well, as I said earlier, both economies have the same model, consumption, debt-fueled based economies. Run by the same people on Wall Street and the City of London. So this, in my opinion, is just a harbinger for the dollar. But the dollar being the reserve currency of the world, the drop in the dollar will be against gold. I know it sounds strange to say that, considering what happened to gold yesterday, down $40, and silver down 5%, or about $1. But believe me, that will happen, and the U.S. is not going to escape this. This is just the periphery of the system going down first, and then the real crisis will come when the center goes down, and that's the US dollar and the Federal Reserve Wall Street based fiat money system. So yeah, that's what I wanted to talk about. And for my UK viewers and people who have pounds, there's a British chap from that made some comments yesterday in my video. He's in Spain, and hi there. I think your name was I forgot what your name was. Roger, I think. But yeah, I think you're doing the right thing. The FTSE is doing well in pound terms, and it will probably protect people in the UK if you have enough wealth to have a basket of stocks. Yes, owning a business will help, but ultimately gold and silver are the currencies that protect you from a currency basically annihilation. That's what I see the pound, what's happening to the pound. They're completely crushing the currency. They're doing it in a controlled fashion, but they might lose control. Who knows? So yeah. So if you enjoy my videos, please like, share, and subscribe to my channel if you haven't yet. If you'd like to donate, there's some links below in the description. Donations are welcome. And thanks for watching. Bye.